Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Thursday, the 14th of February, Valentine's Day, 2019, about 4:15 p.m. Central Standard Time. Well, it was a crazy day. I had my webinar today, had a ball doing that. Got asked the question as the stock market was higher at that point, and what could you say? You know, people were shrugging it off, thinking it's a one-off event of seeing a drop in retail sales in December. Now, remember, that's December. Government shutdown made these reports old, of 1.2%. That's a terrible number. Now, you can say, okay, it had to do with the government shutdown. You could say the stock market was plunging. You could say an awful lot. The simple fact was sales plunged at that point, and the market at first didn't pay attention. Now the market is looking at what's going on with apparently the Senate passing the budget bill. It goes to the House of Representatives, which will rubber stamp it. It'll go to the president. He'll probably sign it, and he's saying, remember, saying is not doing, but he is saying he's going to declare a national emergency to get the rest of the funding for his border wall barrier, whatever you want to call it. And of course, there'll be a court battle after that. The Chinese-U.S. trade delegations, I don't think they're making headway from everything I'm reading on the intellectual property and the subsidies that China does to companies that cause products to be so cheap, then shipped out, unfair practices as we call it. But they're willing to give on trade. In fact, they're willing to give on trade a lot. Now, I'm recording at about 4:15. Those trade talks kick off in about 2 hours from now. Remember the time differences in China. So when I wake up or you wake up, we might find that things have changed, they've gotten worse. There's no way to know on that. When we come to the marketplace and we look at the S&P for the week, the market is still up 37 points. So regardless of what anyone might think, this market has had a nice rally. When I come to the daily charts, you can see a bit of a stall right here over the past 3 trading sessions, I would say. You can see that you still have a pattern of higher lows on the swing line and a higher high. When I look at where the support of the market is, it's a combination of the 18-day average and which is in red, and the green being the 100-day average. Now, if we take back and step back, those averages are moving about 4 to 5 points a day. Will they get to the same number tomorrow, or really when they open 45 minutes from now? I'll be looking to see. In any case, that is an important number. Closing under those two would not be a pretty picture on this chart. Why do I say closing under when the market's been in an uptrend? Because of where you're at. You're fighting right now, is what I pointed out yesterday, the 200-day moving average in the upper Bollinger Band. You're in a resistance area. The last item on the table is the Chinese trade talks. I would think the market would get friendly if we saw they were extended another day or so, because they're getting closer. And I would think that both parties going home and not saying anything to begin with, the best you can hope for is that tariffs won't go on place March 1st. Additional tariffs, maybe there's an extension. The Chinese have said to want a 60-day extension. They always want a further extension. Nothing gets done. They've had plenty of time to negotiate. In any case, here's where you're at right now, and momentum-wise, you're still bullish. So the bulls have control. Even if you fall into the support, to me the key will be the red line, which is 87, not closing under 80. As long as that doesn't occur, I think this market remains bullish. Yes, we're in resistance, but that doesn't mean on a break you won't find support. In the NASDAQ, you didn't get quite up to the same numbers, but you have the same momentum. If we take a look, you can see both numbers are over 80 today. Both were over 80 yesterday, both the day before, not the day before. So you embedded today. When you embed, that puts on the brakes the idea that unless you lose that red line getting under 80, the traders will be buyers on breaks. Just like in the S&P, look at the 100-day and the 18-day. They're both over, by the way, the last swing line low, as they were in this market. So you've got support before the last break lows are taken out in both charts. In the Dow, you had cleared, past tense, the 200-day average. It's the upper Bollinger Band that's the sole resistance. Like the other indices, you have embedded, which is bullish, and you have 3 tiers of support here. You've got the 200-day moving average, you can see the gray. Then you've got the green, which is 24,908, and the red, 24,969. So in between, let's call it 25,064 and 24,908, you've got a lot of support. Take out 24,000, in fact, this break low, we'll give it to you right here. Take out 24,862, this market would have a problem, chart-wise. When I come over to the Russell, you're up to the upper Bollinger Band. You still have the embedded reading. This has been the strongest of the indices. I'm pretty sure I said that during the week. Now the question, like in all the others, are we due to get a bullish crossover where the 18-day average gets over the green here? Here it's already done it. Today was a bullish crossover in the Dow. Not quite there in the NASDAQ and not quite there in the S&P. When you come to the VIX, if you take a look at what's going on, you still have the embedded reading, but the bent of the red line is turned up. You went up to the 18-day average, ran into the brick wall, stopped there. This can do either way. Tomorrow's going to be a very interesting charting day. In T-bonds, from yesterday, where you fell back to the line in the sand, that 18-day average of closes, if you rally, maybe the upper resistance would be the Bollinger Band, as it often is. You tell me what went on there. It's exactly what occurred. Didn't quite get there in the 10-year notes, but certainly that 18-day average offered support. What would turn negative on these charts is taking out yesterday's, that is Wednesday's lows, without taking out these highs. That could end up with lower highs, lower lows, setting the market down. But you're not there, and you have to first get through the support level of the 18-day average to break through it. The bulls still have control in this market. On the TLT ETF, today you put back in and kept that bullish formation. If you look at yesterday, you did have a lower low and a higher high. The market went to that line in the sand, that 18-day average. As it turns out, it held it, and it's trying to make a run back up to the upper Bollinger Band at this time. Like I just said in the bonds, you don't want to see this not taken out and Wednesday's low taken out. The bulls still have control of the market, though. In the dollar index, you went back up to the Bollinger Band top, ran into your resistance and stalled. Now, when I look at what the slow stochastics are doing today, both numbers over 80, both over 80 on Wednesday, and not so on Tuesday. You don't have an embedded reading. What you have is an overbought market. It's going to decide right away, does it embed or not? That'll be on Friday, so we're going to find out what it does there. If the market were to take out 96.44, the chart would suddenly look like it got very overbought and wants to pull back into this support area. If it can stay embedded, it doesn't mean you're not through making for the highs and maybe even higher highs. In the eurocurrency, you went back down to the lower Bollinger Band, bounced away. Just the way that you stopped at the dollar on the top Bollinger Band, you did it the reverse in this market. Are you close to embedding? No. You're just an oversold market. To negate the downtrend, you've got to take out 113.72.5. In the British pound, Miss May just keeps losing these elections. But is that something that's being planned? In other words, get as close as you can to March 29th when Brexit's supposed to happen, and you have a choice. Hard Brexit, delay Brexit right at the last minute, or try to get something by playing bluff poker with the European Union to get some type of concession more on the Irish border. Any way you go, the market is punishing the pound as this goes on. You've gone from 132.63 down to today's low of 127.91. You are oversold. You hit a downside target today, so I could see where a stall might come in the market, but this is a dangerous game of poker. In the Japanese yen, we were talking yesterday, not today, that the market had gone down to the 100-day average, got right under that Bollinger Band, and that could be where the support showed up. Take a look what it did today. So it verified that that's it. But support is not a change of trend. It hit a target, it bounced, it's no longer under the Bollinger Band. I am going to, with the embedded market here, think that pros are going to sell this market short until they lose that red line back over 20. In Bitcoin, the market now has a pattern of lower highs, lower lows, but the bigger picture is sideways. You're now not breaking down under the $3,000 level. You're not breaking out to the upside. You seem to have found a trading zone in the $3,600 range or so, $3,400, right in that area. In Brent versus WTI crude, it's still a runaway in favor of the Brent. And when we take a look at what's going on, is this a breakout is what you've got to ask yourself. Now, you're going to say to me, and you should, if you were in today's chart room, we had, I think, talked about that, our live webinar. It is not uncommon when you get sideways action to see the market get overbought as it tries to push that out. The upper Bollinger Band. Yesterday it went there today. This market is acting bullish. I realize it is overbought. That doesn't mean it's not acting bullish. On breaks, I would expect to see support between the Bollinger Band, in other words, under it, down to the 18-day average of closes. In WTI crude, you're still stuck very much in the sideways bands right here, and the question is, does it move? Now, I think we'll have to move away from the March now because I'd want to move out to further months, and obviously the May versus May might make sense, but you're going to have more contract volume in April contracts. Gasoline, doing just what we saw in the Brent. It's trying to break out to the upside here. And if it can add something to it, is the 100-day average of potential. On pullbacks, I would expect to see support here. And I realize the market is overbought. I am not saying it isn't, but that's how you get breakouts out of tight embedded readings. In the natural gas, still looks ugly as can be. And this is the March contract. It's time to move on to the Aprils, but you can see just how ugly this is. Hasn't been able to get a bounce for one reason or the other. Now, one of the things I love to do is my morning video. If you were to ask me a new product that I brought to you, this is my most exciting product in years. Why? I get to, in the morning, open up my charts, and they are this color, with these different lines, and I teach you what these lines are. If you took my charting course, it all ties together. This reinforces it every day. But even for those of you that haven't, you get an understanding. Is it the same as taking the course? Of course not. But when you get to this and you play with it and you see that I cover all these markets and throw out trading ideas, and why? What if you have an idea and you're looking for somebody to bounce it off of? You think you're going to your next door neighbor and saying, hey, Bob, what do you think of crude oil right now? Don't think you're going to get quite the answer you'd get from me as I'm looking at the chart and explaining to you what I'm seeing, what I think the pros are doing, what the fundamentals are. I do this each morning, Monday through Friday. So if you're looking for something to bounce an idea off of, this might be what you need. If you're thinking, you know, I like this market, what do I have to look at here? That could be an idea for it. What is the cost to give this a try? About 26 cents a day. So I'm kidding, right? But I'm not. It's $7.95. We've also brought out our one-year subscription. So if you go on our website, you can now subscribe to that. That's already up there when you go to Ira's subscriber video. And if you decide to just go month to month, after the first month of $7.95, it goes to $15. If you do a year at a time, it's $13 a month. You pay it up front. It's that simple. I think you'll find it pretty interesting. In the meantime, I'm Ira Epstein. We got a lot more to go. Remember, the Chinese trade deal, we're going to wake up tonight because the meeting starts, like I said, about now an hour and 40 minutes away, and we'll find out what's going on. Have a good night.